morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Tuesday, November 26th. Well, mostly higher trade here in the ag space overnight, led by strength in the bean, oil, and wheat markets. Pretty much the opposite of what we saw during Monday's trade action. Wheat is currently 6 to 8 higher, that despite better than expected crop ratings here in the U.S., while bean oil has surged about 140 points on news that President-elect Trump announced that on day one of his second term, he will impose an additional 10% tariff on Chinese imports and a 25% tariff on imports from Canada and Mexico, at least until these two countries help stop the flow of illegal drugs and immigrants into the U.S. While bean oil rallied on the news, canola prices did fall to two-month lows here as imports from Canada will likely be much less attractive in the production of real renewable diesel here in the U.S. Bean oil has closed lower for 5 consecutive sessions while falling to a 5-week low of a 41.2% product value on crush margins. Corn is mixed right now within a half cent of unchanged. Beans are 4 to 5 better, while meal has backed off between $1.50 and $2. After the close yesterday, winter wheat ratings did improve 6% to 55% good to excellent versus only 50% a year ago. The improvement was better than expected and is now the highest rated winter wheat crop in 6 years. Mexico does continue to snap up large volumes of U.S. corn ahead of the potential increased tariffs, with yesterday's announced purchase of 454,000 metric tons. Roughly 80% of this for the 24-25 marketing year, with a balance of 20% for 25-26. South American forecasts remain favorable. Widespread rains are expected this week in Argentina. Soybean plantings will likely reach the halfway point later this week. In Brazil, bean plantings there reached 86% late last week, likely well over 90% here by the end of the month. Rains the second half of this week will favor southern growing areas, keeping production prospects high. Weekly ethanol production tomorrow, while export sales are delayed until Friday during that abbreviated session. That, of course, following Thursday's Thanksgiving break. Also on Friday, we'll get a monthly update on EIA biofuel capacity and production, along with the feedstock usage data. D's corn slipped slightly lower here, two-sided trade overnight. Support below the market at its 50-day moving average. That comes in at 418 3/4, resistance at 435. Good demand continues to provide support below the market and help keep these spreads tight, while lack of a weather problem in South America seems to keep a lid on rally attempts. GM beans continue to chop around between $9.75 and $10. To me, the path of least resistance remains to the downside without a more threatening forecast in South America. Longer term, we do have support at $9.35 here for the spot contract. As mentioned, diesel oil did rally back here overnight. It has hit its 100-day moving average resistance at 42.62. I look for bean oil to recover product value on this recent break. I do look for higher export numbers in the December WASDE as U.S. bean oil remains very competitive in the global marketplace. A lot of uncertainty, however, on the biofuel side, with the $1 blender's credit hanging in the balance as that expires at the end of this year. I do look for meal prices to retest their recent lows. And I think downside is somewhat limited here in the wheat as tensions do remain elevated in the Black Sea region. That despite increased conditions, better conditions here in the U.S. and ongoing harvest in the Southern Hemisphere. So mixed trade here, strength in the bean oil. Thank you for listening, everyone. I hope you have a great Tuesday.